Sorry to say this, but it's over. Palantir's growth struggle are over. Sorry for the clickbait, if that becomes the title or something. I hate doing this. But anyways, let's talk about Palantir's next leg of growth. You might have seen this post if you're following Shyam Sankar on LinkedIn or maybe on X as well, talking about AIP Now. So AIP Now accelerates your outcomes, enabling you to deploy workflows, solutions, applications, and more that solve complex enterprise challenges across industries and functions with a click. AIP meant we could deliver value in 8 hours, no longer 8 weeks. AIP Now makes that more like 8 minutes. Why is that so important? Well, let's go back and look at what Arnie shared in his newsletter. By the way, go follow Arnie on X, link will be down in the description below. He has also a great newsletter. So the sales cycle back in 2020 was approximately 6 months. 2022, approximately 2 months. 2023, 5 days, thanks to the AIP bootcamps. And now with AIP Now, we're going closer to 8 to 10 minutes. What is AIP Now? Well, it's this. You can go on the website, Palantir AIP Now. We show, they tell. Basically, what you're getting here is a menu with various use cases in almost all of the biggest industries out there: aerospace, aviation, automotive, logistics, insurance, retail, professional services, healthcare, media, financial services, energy, you name it, etc., etc. And then you can filter here through the functions, so customer service, finance, human resources, product R&D, etc., etc. You find here something that is useful for you. You click on it, you get a little demonstration here, and then you can click request, putting all your details, and then you'll get contacted. Pretty simple. Now again, why is this super important? Well, as I've discussed various times on this channel, alone, with Arnie, with Emir, Palantir, what we want to see is continued accelerated revenue growth. Previously, it took them way too long to attract clients, to sign contracts, and for that to be reflected in the numbers. More recently, we've seen an acceleration of that growth. Still not the best of the best, but we're slowly but surely getting there. Why is that important? Well, currently, if you look at the state of the stock, by the way, on Thursday, so yesterday, Friday, the market is closed. Good Friday. Happy Easter to all of you that are celebrating. On Thursday, Palantir fell 6.12%. There's now a market cap closer to $50 billion. Now, this is a company that has a market cap of close to $50 billion, but revenue-wise, you can clearly see here, price to sales ratio in the next 12 months, 19 times. This is a company that still $50 billion in market cap, but not generating as much revenue as you would think with this market cap. No, 19 times is not the cheapest out there, but this is why something like AIP Now is of extreme importance, because it accelerates the sales cycle by so much. We were going to see an acceleration or a continued acceleration of revenue growth each and every quarter. We know that the positive effects of AIP bootcamps are going to take a while. It's not just because they have AIP bootcamps a couple of weeks ago that next quarter we're already going to see those positive effects results in the quarter. No, it's not going to happen. It's going to take some time. This is talking about the commercial side of things. Government contracts, those things take even longer. But here, sales cycle acceleration is of extreme importance because this is a software business. This is not a consulting business, software business. We know that with software business, your gross margin, or in this case, adjusted gross margin, is in the 80%. And so just by focusing on the traditional number one metric that everybody looks at, which is the PE, you don't really get the full story, right? Because right now, PE, forward PE, that is 70.5 times. You're saying it's extremely, extremely expensive. Okay, we can all agree it's not the cheapest one. But what you would be saying is that back then, here in May 2023, or maybe even May 2022 at 38.5 times, you might say, oh, much cheaper, right? 38.5 times for PE, much, much cheaper for a software company. Well, in my opinion, I'd rather pay now 70.5 times for PE than back then 38.5 times, where there was a revenue deceleration. Things weren't going into the right direction. Now you're paying a bit more, but at least the business has a lot of momentum. So again, Just looking at a PE, for example, is not telling you the full story, and you're probably going to miss out on a ton of tech businesses. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, going back to Palantir's growth rates, or expected growth rate with regards to analysts in the coming fiscal years. So with regards to sales growth, they're expecting for the coming fiscal years, including this one, 20% year-over-year growth. EPS this year, 30%, then the coming 2 fiscal years, 20% year-over-year growth. In my opinion, we're going to see sales growth reaccelerate even more. So the base case is going to be 20%, and I do expect it to go back to around 30%. Whenever that will happen, I don't know, but I don't think we're going to stay in a state where this only grows 20% year over year. And whenever that happens, whenever we get a further indication, now you know when they say a picture is worth more than 1,000 words, well, maybe a picture here is worth more than $50 billion, although maybe that's a bit too far-fetched, but here Arnie shares with us, you can see the growth acceleration when AIP launched. This is Palantir's total customer is in the turquoise, and the black line is Palantir stock price. Going to the next great contributor of Palantir content, Emir. We had a great talk a couple of weeks back. If you missed that, it's going to be in the top right corner. So he asked here, does AIP work? Well, the answer is quite simply yes. He says here Palantir needed an efficient customer acquisition cycle. We can measure this by looking at customer acquisition cost and customer acquisition payback period. As of Q4, we can see a downtrend in customer acquisition cost and the implied payback. Note that back in 2022, that was artificially boosted by SPACs. And so if we go back to the last quarter, we see an increase in deals. We see an increase in deals of at least $1 million, at least $5 million, and at least $10 million. With AIP Now, with the reduction in the sales cycle, with the acquisition of new customers becoming cheaper and cheaper, you're going to reach a point of extremely good operating leverage, meaning increase in sales or continued reacceleration of revenue growth, while not needing to invest as much as before, meaning a lot of profit flows to the bottom line, more free cash flow, more earnings, your E in PE becomes better as well. Of course, depending on how much the stock price moves, that's also a factor to take into consideration. Right now, talking about the stock itself, this is on the weekly. We're now at $23, right between the 20 and the 50-day one. The 50-day one sits at $22.56, and the 200-day one, if we ever get so lucky to buy at those prices, which will be at $18. Of course, like I said, on Friday, markets are closed, but I do believe we're getting some important numbers. I believe the PCE number and maybe even a comment or something by Jerome Powell. So that could definitely move the markets next week. But overall, that's Palantir right now. Palantir is in a very, very interesting situation. Now, let's see how that will play out. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.